Hello, everyone. Happy Friday. It is Friday, November 22nd, 2024. Rocco just had butt at the table. You right in there? He just has a little coconut in there. Interesting trading day today, as usual. Bitcoin, all the rage this week and today as well. New all-time highs, just a couple $100 away from hitting that 100K mark. Human beings in society love round numbers, so that's where we are with that. We'll take a look at the charts, of course. We'll do a big end of week recap. You saw the NVIDIA earnings on Wednesday. Today was about retail and India rallying about 2% apiece, big in those areas. That was really the all the indices were up. We'll take a look at the SPY and everything, but retail India up 2%, and China and natural gas fell. I re-entered my nat gas short position. We'll take a look at the chart. It was almost comical what happened. They got to the 200-day moving average, couldn't hold it for more than 10 minutes. I had seen on my phone afterwards. I ended up getting in the short today at VWAP, so still happy with the level. Not as much meat on it as I wanted, but they're in January puts. I think I entered the at the monies. We'll take a look. And like I said, new all-time highs for Bitcoin. And this week, when all said and done, was all about the advances in uranium. Thanks to the Ken Griffin news. Technical analysis got me in that trade last week before he had uttered a word. And a very nice position on that. So the technicals lead you before, obviously I don't have the means of data that Citadel has, and the same reason that Ken Griffin got in, but we got in at the same position, otherwise. Bitcoin, obviously, big 8.5%, 9% gain this week. And the gold miners, which was on the outs last week. So they were going back in. This is not, people just buying NVIDIA or just buying tech. There obviously is a big push in software over, this flywheel of tech expense and innovation and investment, where now it's going from hardware to software. And we'll go through this wheel over and over. We'll take a look at the charts. Okay, so without further ado, let's share the little screen here. Let's see what we got. So here we go. That's what it was about, man. The mighty Bitcoin here, 100K. Pretty astonishing. Very close to it. I don't want to announce it yet. It's not there yet. It's like 99,200 right now. But yeah, so here it is in writing for those that couldn't see it earlier, or that couldn't, understand me earlier. But yeah, so today, retail in India, again, rally 2%, while China and nat gas fall. New all-time highs for Bitcoin this week, like I said, characterized by 8 to 9% advances in uranium, Bitcoin, and the gold miners. All right, so without further ado, let's get a look on the day chart here for SPY. That's me. Pretty tired out 2 nights in a row. Tonight I'm out again, and I feel old. It's been fun, but I'm getting very tired. Okay, so here is the intraday chart. Here's a 930 bar here. That's when we peaked. Actually, they were essentially selling it from the open. We couldn't really get above those highs that we struck at the 930 bell. The ever important line is VWAP. You see it up and above all the way through the European close. And then we finally got our legs underneath us a little bit. It was really sideways trying to hold that 595 level in SPY, right where my cursor is. We ended up closing right at 595.01. VWAP went out at 594.95. So overall, pretty decent, healthy performance. All the indices closed up, volatility in by about 4%. As I zoom out, one of the nice things I like about contextualizing the show, even if you don't watch obviously every single one, I don't know why you don't, because pretty face obviously, but always like to re-get into the analysis and see what the targets are, where we are, and I'll call myself out if I was wrong or if I'm right. So as I said before here, I had anticipated a distribution phase, starting for the S&P right around, around the 20th, like this week, like 2 days ago. And what I mean by that, in terms of simplicity, is I had it clearly marked levels of risk reward. 585, I loved. If you were able to buy SPY here, you got a couple of chances there. So again, right here is my cursor, where that thin black line is here. You get a couple of chances there. The low on the 20th was 585. And then, up and away here. I don't think we're, going to go to the moon here. My upside, again, like I said, is 600, 601, 602, right around there. So it's about 1% of upside. And in terms of the downside, I still do see us dropping to about 587 or so in the next 2 weeks. So don't know. Typically, there is a bit of a sell-off right before Thanksgiving. It could be on a very low volume session on Wednesday, I'm anticipating. Wednesday's a full day. Thursday is gobble gobble, and Friday's a 1 o'clock close. So it could be on one of those days next week. Don't anticipate heavy volume. But typically, if you look at the seasonality chart, I'm not going to put it up here, but there is typically a sell-off coming, and we just did a little bit too much here in terms of the advance. So again, for the next 2 weeks or so, I'll give you through, that December 5th or so, I have us coming back to about 587, and that's going to be your buy signal, in my opinion, for an everything rally towards the end of the year. Small caps probably do it up the biggest just because of how much of a laggard, they've been, and semis getting a lot of love. But banks look great. We'll take a look at the bank chart. So yeah, that's my call on that. All righty. So stuff that moved today, let's get into it. Okay, screen's up. Boop, boop, boop. All right, so retail, new 52-week high today. I'm long Abercrombie and Fitch. I have been. Retail, a big mover today to the upside. It's had some up and downs. Target got smoked the other day. Today, a monster candle. Look at this. Just 2 days ago, this thing was trading, $78, and now $81, which is a new 52-week high after having, pretty decent or a pretty hard time getting above 80 all the way since back in May. So, this has to deal obviously with the consumer in terms of what it's done here. So my full valuation for this rally had been right around $81. That has been accomplished. I see over the next week or so, maybe 1 to 2 weeks, a mean reversion down to about $78. So I'm more of a holder in Abercrombie and Fitch, but it has had a nice move. Some of these earnings, the companies, the constituents in here are reporting as well, like Gap, Ross. Some are beating, some are getting smoked. So be on the lookout. But the chart itself, nice rise of 200 moving average, has momentum, new 52-week highs, looks good. Wouldn't chase here. I think your setup will be in the next 2 weeks or so when we get a little bit of a market pullback. And if you get into this at 78, I would buy it with a new, 81 target. All right, India. We've been looking at this one. This has been absolute crapola. This has been just really not great position. I'm in the December calls, and immediately, nice move today, up 2%. So again, what I always trust is the 200-day moving average. Right here, the clock started November 12th. I immediately gave it to, honestly, like Christmas Day, 4 to 6 weeks to see what is going to, if it's going to recover that 200-day moving average or not. It is still rising 200-day. I like that. Today got very close. To be specific, the 200-day is 54.41. We closed at 54.19, so very, very close. This has all this after all is said and done. This work has just gone into the 21-day exponential moving average. So I think it'll recover that 200-day moving average. And then I think an ultimate target for 55, but not quite the gusto that we had here, this massive bullishness that we had at the end of September. That doesn't look like that's going to be revisited right now. This chart does not look so swell. I think it gets to about 55 over the next 2 weeks or so, and I might honestly potentially exit my India position then for a future roll later. But this looks like it's lost momentum. There's better charts than this. All right, and then another one I want to show, the Schwab. There wasn't a ton that moved multiple sigma levels today. The retail moved 2.5%, a big move. India moved 2% today. This is what they were buying. Another one, the Dividend Equity ETF. So this hit new all-time high today. Let me just pull up what are the holders of this. They were playing Dividend Equity today. This is 40% of this fund is Bristol Myers Squibb, BlackRock, Cisco, Chevron, and Home Depot. Verizon. So obviously it's your dividend payers. This shoots for like a 4% yield. Let me see what the actual yield is on this. I imagine it's a little bit lower. No, it's 8% on this guy. Wow. Let me just double check that because that is a massive div. Someone was asking before about dividend payers. I'm sorry, yeah, 3%. I knew I was looking at something wrong there. So 3% dividend on this, new all-time high in terms of price. My full target for this, in the near term was right around 29.30. I'm not even joking. So we got that today, closed above it by nickel, and I see this pulling back over the next 2 weeks or so to about 28.70. So not much else to say there. So that's what they were buying in size today. And again, major constituents. I'm going to see what dragged that up in terms of, because rates today were slightly lower, in the longer term. But I know BlackRock was having a decent day and week as well. All right. The big movers to the downside today, there was a few. Tried to keep us, not correlated as possible, but it was China being a big drag. So China through the ASHR ETF down 3%. That was a big move lower here. I'm the FXI, which I believe we'll look at later, but let's look at the ASHR for a second here. So down 3%. This is going to take a little bit longer to base. I'm glad that 200-day moving average, specifically on this ETF, is holding here. That supports all the way back at 25. Again, the crazy euphoria for China went off to October 7th when they announced that stimulus. And overall, it's held, for the most part. We're back at September 26 levels, still where we were overbought the first time. China is going under 50 RSI for the first time since before that stimulus was announced. So you are seeing some warning signs. I don't love seeing it down 3% today. I think this will base and not go much lower than 26.5. I do see a mean reversion push for this over the next 2 weeks or so to about 27.75. So that would be, another dollar move or so, or 3-4% to the upside in China. It may take a little bit longer because I see, U.S. equities just at least digesting the gains that we've had recently. I don't think they exactly swarm into China, but I do see I'd rather be long than short, but curb your enthusiasm. I don't see monster upside. Maybe about, like I said, $28 over the next 2 to 3 weeks for ASHR. All right. Nat gas. I want to pull up this sucker. It's funny. I was just texting a buddy of mine when we were out at a CMT or Charter Market Technician event Wednesday night, and I said, I hope to God I can get a picture perfect tag of nat gas getting to the 200 moving average again, because that'll be a crash dummies sign to short it. And look what happened here. Yesterday, the 200 moving average, 1547. The high that day is 1552. It got Dikembe. Rest in peace, Dikembe. It was down there yesterday and down another 6% today. This thing is a piece of crap. Technical analysis and algos are one of the same. Whenever nat gas gets to its 200 moving average, it gets sold. And this has been something that's been happening since it put in its highs back in January. Okay. So that was the easy play. It actually moved so fast. I'd even get into it yesterday. I had seen it after the fact. And then today I got in at VWAP. So I'm glad I am in the, let me just pull it up. I think I bought let me pull it up here. UNG Jan 14 puts. So I got in the Jan 14 puts here. My target is new 52-week lows for this in about the next 2 to 3 weeks. I think this is going to $12 even. The current 52-week low is $12.35. So I expect undercut of that. This has momentum to the downside. These look like ugly candles. I would say short nat gas. I think it's actually going to be cooperating it as well in terms of the downside. If the market does have a pullback, they're going to liquidate garbage like this even faster. All right, and the next one, so a big move down today for nat gas, down 5.5%. Next, tried to keep it diversified. It was hard to. It was pretty focused selling today in China and Chinese internet. Chinese internet down 2.8% today. So, of course, correlated with what I just said about ASHR. I see this basing and not going too much lower than 29.5. So this rising 200-day moving average, I believe, should hold right here where my thin black line is here, right around 29.5. I believe it's a hold. And I do think you get a mean reversion. Might take a little bit longer, so I would say more closer to maybe 3 weeks or so, probably maybe like right before Christmas for this to get to about 31.5, which would be a nice move. That would be, what is that? Almost $2. So a nice move for Chinese internet. Be on the lookout. It just might take some time though. Like I said, I'm long FXI. Has not been, a super winner since those highs in early October. All right, top 3 gainers of the past 5 days. No repeats in charts. Uranium, the best bet. And this is why technical analysis is not astrology. Sometimes it's freakier and stranger than fiction. But I got in because there was a golden cross, which is the 50-day and the 200-day. The 50 rises over the 200-day. I was trying to get momentum. I had a lot of other cases, holding its 200-day moving average. There's a lot of, innocent till proven guilty, as it were. And I said, you know what, let me just take the chance and get in. And then, of course, 3 days later, Ken Griffin announces that he believes nuclear is the future, and he was buying uranium and uranium miners. And this thing is getting very close to its 52-week high. The best gainer this week up 9%, or almost, an average of 2% a day. Today, flat. Is it getting tired? So I said before Kenny G had said anything, my target was 34. It still is. It's getting very close to that. You're getting some volatility expansion where you see this blue shaded area, get bigger essentially. Your support's down here at 29 even. I am in I'll just pull it up and let me see what I'm in. So I have a bunch of positions. I do not memorize them. I'm in the Jan 30s and they're up almost 100%. So that's been a lovely trade. I'm going to stick with it. And I think this 200-day moving average will start to curl up. So great stuff on that. I think maybe another week or two to get closer to that 34. And then, I am expecting a bit of a pullback. It's done a little bit too much. I think it'll pull back to about 31.5 over the next couple of weeks. But as I said, I'm in the 30 call, so I'm sitting pretty on that. All right, so if you were long this, congrats. That was the biggest gainer of the week. Second biggest gainer, the IBIT, up 8.5% today, up 80 bips. This is a new all-time high for this ETF. I've been calling for a pullback of 80 to 80K or so in Bitcoin before it gets this massive level. Just like I said, in terms of full valuation, full targets, and where things are, my full target for this is about 51 to 52 or so on IBIT, and here we are trading 56. So it's 10% above. It just had an absolute monster run, but this is a young stallion. This can do much more, like I said before, PRs than like we saw last week. Tyson and Paul. This isn't nostalgia. This thing is running right now. Okay, this is the bull at the gym doing 500-pound power squats. Okay, you don't want to mess with Bitcoin right now. It's the best asset in the past 2-year, 5-year, 10-year look back. You have to own it. And like I heard at the CMT event at Bloomberg Wednesday, if you call yourself a trend follower and you don't own this, you should relearn how to read the materials again, because you're not really understanding how to get in proper assets. I hated Bitcoin for the longest time. Been addicted to buying mega cap tech, but do you want to make money, or do you want to be right? And whether it's greater fool theory or more application or just institutional demand, doesn't matter. The case is the same for this guy, and it's new all-time highs, and that usually has more new all-time highs coming. So again, full valuation $52 for me on this. Wouldn't chase it here. I do think you'll get your chance in the next 2 weeks or so. You might have some massive FOMO if it hits 100K this weekend. Immediately shoots to 103. It's very, very possible. I still think, especially with a larger potential market pullback, in terms of 2%, in terms of SPY, I do think this comes down. Ned Davis for the win. Nice, Caleb. If you have a ticker or anything, let me put it in there. I'll take a look, whatever. A lot of stuff moved this week. So yeah, that's my call on IBIT. I do think it pulls back. It has so much momentum, but I wouldn't be shocked if this pulls back to about in the next 2 to 3 weeks or so to 48. I'm just looking at the convergence of moving averages. It's just not totally meaningless for us to pull back to 48. That'd be a monster move of about 8 points. So we'll see. I'll look at the larger Bitcoin chart as well later. Okay, so the next one. So we're going through biggest moves of the week: uranium, Bitcoin, and then gold miners. So I'm blessed to be in 3 out of 3 of these. And technical analysis got me in all 3. Uranium, technical analysis, biggest winner of the week. Bitcoin, been in. You have to be. Second biggest winner. And then GDX, I've been in. This one has been taking a hurting because it had a nice stair step all the way to October 22nd. And then really just a scary, again, fall on November 14th, the 200 moving average. Look at this. And if you don't think the technical analysis and algos are very, very linked, look at how I got to there on November 14th. And I mentioned it in the video last Thursday. It was a Thursday, right? Yeah, that's how I know it was. I said, this is probably good risk reward. I don't think you have much downside, and this group can move. And I said, guess what? GDX very likely. I have an as-of chart here, so let me pull off from last Thursday, it was the 14th. I said this thing should get to 39, and it was closing that day at 36. All right. We are at 38.30 right now. I still think this heads forwards. I think this gets to, I'll stick with 39, potentially 41. But yeah, this has a little bit more to go. Today up 35 bips, and the third best performer this week. So not a massive beta week. They were buying uranium, Bitcoin, and gold miners. I'm not talking about the regular tech or airlines or strictly banks. They were buying those areas. Those are where the alpha was this week. Now, what did they take out to the woodshed? And again, no repeat in charts, but top 3 losers of the past 5 days. China, the biggest loser. Again, in terms of the scale, the winners were the gold miners through uranium, all about 8-9%. To the downside, much de minimis there. It was China, the biggest loser this week, down 3%. So not even a ton, less than 1% a day, obviously. The next one, even less, obviously, because it goes 1 and then 2. The airlines, I was very close to buying United Airlines. I still need a little bit more of a pullback. But finally, this group, and this is one of the absolute fire groups in the market since last November. You have to pay attention to this because I do think this will get investor flow very soon. You actually had a very nice and rare pullback to the 20-day moving average 2 days ago. I wish I pulled the trigger then. I still think I might get another chance. Like I said, I want to get United Airlines. I think you do get paid handsomely if you take risk in some of these, in some of these names as opposed to the ETF. So why not take the risk? So I would love for this to pull back to about 2360 or so. A nice day today of 90 bips, but this has gotten, hit down 1.2% on the week. I want to see if this can, pull back to about 2360. I'm going to use kind of what I think are potential headwinds in the market over the next 2 weeks, and I'm going to pull the trigger to get into my favorite of the group is United Airlines. Yeah, Delta looks good too. Obviously, you have the Spirit news, so there's a player out of the game. But yeah, I think I want to enter this around 2360, and my target is 25 even. That's a big $1.40 move on an ETF like this. All right. So China, worst loser this week, down 3%. After that, the airlines down 1%. And right with this, I don't know if you guys have been looking at this, but Europe has had a nasty week. It depends where you go. But for example, France hit 52-week lows today. Can't really say that about many areas. Like we have Canada hitting all-time highs. I know that's not in Europe. I'm showing different geographies. Obviously, you have SPY super strong. And then you go to Europe again. So 200-day moving average is now starting to decline by a penny or so. It's 51.16. And again, the same thing I said that we had with India, right? We give it a month, 4 to 6 weeks, see where it can reclaim the, sand, excuse me, that sand hourglass for me started right here, October 30th. So my calendar for me goes to about November 30th to about, December 14th or right around thereabouts. I need to see it get above 51. Otherwise, I would exit positions. This is not a great place to be. In terms of a shorter term forecast, because it is one of the biggest losers this week, down 1%, not massive, but I do think this 47.70 level holds. It's interesting. I mean, if you want to get really nitty gritty, 47.20 has served as support all the way going back to January, January, February. So pretty impressive. But now this 200-day moving average looks heavy. I think this bounces to about 49.25 over the next 2 to 3 weeks. And I just don't think Europe is the place to be for whatever reason. And of course, the election was here and it really hasn't helped its future, in my opinion. So don't love this area. I see at best it getting to about 49, maybe 50. But this 200-day looks like it's out of reach, and Europe looks like a weak spot to be in. All right. So top 3 absolute trades of the past 5 days. They're all longs, not specifically tech or anything like that. Long uranium up 9%, long IBIT up 8.5%, and then long GDX up 7.5%. Fortunate this week to be in 3 of the 3. Rather be lucky than good. And then of course the almighty, all ever important top 3 absolute trades of the past 52 weeks. All right. I think you could have guessed it. There was one change in this, but let me start from the top. GBTC up 159% over the past year. Obviously, similar forecast to what I said on IBIT. Still can expect a pullback at any moment. For this specific instrument, I would look at this to go back to like 68, which would be 10 points. Monster. I'll pull up Bitcoin in a minute. But this is the best performing ETF in the market from last November 22nd, y'all. Up 159%. Last year's close on this date was $30. It's trading 79 now, and that's where you get that math. I will go to the Kahuna. We'll get a real life update here on a Friday afternoon. Did we cross 100 yet? No, it got to 99.6. And now we're at 98.8. Just a monster move. Even the week after the election, of course, Gensler announced that he's going to be resigning at the very beginning or at the very end of the Biden term. So he's out January 20th. And we'll see what happens with that. But yeah, still, like I said, people might, if it does get to 100, it doesn't. Who knows? Here with the vol expansion, I see 103 as a near-term target. Could do that. And like I said, could fade. But I don't think this is going to go to the sky. Like I said here as well, we become overbought starting on the 8th. So this has been a runaway market for 14 days. We've had similar nonstop movements. So February 26th to the 14th of March, we were overbought. That was 18 days. And then it started to give way. Maybe this can happen. It can last till Monday. It's interesting because next week's a holiday week. But I still see totally reasonable, a drop to about 85K in the cards. Some people are going to doubt the move. But it's totally reasonable. Pull back. Trees don't go to the sky. I usually say that 10 times an episode. Here's my first time I said it today, I think. And again, I think the train has left the station in terms of, and I was talking about this with the CIO, Wednesday night at Bloomberg. I don't think you're going to see under 75K Bitcoin anymore. I think that train has left the station and on to 200K next Christmas. So that's my thoughts on that. Second best performer of the past year. Okay, this is where you have to be. This isn't subjective. This is just if you want to make money. This is where you should be parking cash. Bitcoin, you have to allocate a percent. Don't care what it is, 5 to 10%. If you want to be conservative, 5. You can grow it to 10. Some people go 25, 40%. You do you, but you have to be allocated. It's the largest winner year over year, and you have to volatility adjust that. And what I mean by that is really quickly, it's up 160% year over year. The next winner I'm giving you is regional banks. Regional banks up 53%. We had been celebrating the KBE. I'm in the KBE. The carry is up just a touch beneath that, but it's got much more volume. So I wanted to, and liquidity. So I wanted to address it more. It's looking right down the barrel of its 52-week high. It's very, very close. It actually is 2 cents away. It closed on the highs of the day, and it's 2 cents away from putting new 52-week highs. This is your second best performer in the past year. I don't think this is going to change. Regional banks did exceptionally well during the first Trump administration in terms of deregulation, and also the Fed's cutting rates. This is a lot of tailwinds. My target for this near term is 67, so I think it's fully appreciated right now. I think this will pull back to about 63.5 in the next couple of weeks. This sector or subsector can move quickly. So 63.5 from 68 is quite a move, and I think you'll get it potentially in the next couple of weeks, and that will be your trigger to enter. Okay, I'm in the KBE. I'm probably going to get double invested in this. But if you don't have a position, I implore you, like you have to do it in the next 2 weeks or so. I think when this pulls back to about 63, 64 handle, you have to. Okay, so GBTC up 160% year over year, 159 to be exact. After that, carry up 53. So obviously you don't have to have the same level of dollar investment in each. Carry a lot less volatile than Bitcoin. So you can allocate more to carry and less to GBTC, since you obviously are going to have much more upside, it seems, in terms of volatility and in gains in Bitcoin. And it's carry, as I said. And the third one, it looks a little scary. Had a lot of communication, with friends and stuff over the semis, because a lot of software is getting the love. It looks like they're exiting semis a bit. It just looks a little tired. It doesn't look terrible. It's holding a 200-day moving average. You get these opportunities about once a quarter or so. You've had really scary day, the Japan Nikkei crash August 5th, which was really formative for markets. Bitcoin had a long time to battle after its Japan Nikkei crash. It really was sick after that. Semis have held on just fine. September 6th, another dip. Here, you didn't even get that bad November 18th. We had, NVIDIA, obviously a major holder of this, and it had its earnings. Expected move was 8%. It was down 2.5% after hours. It closed up the next day, and here it was down again today. These movers have to take a breath sometimes. Okay, so all that being said, for the semis, not a great forecast. I think it'll base. It potentially touches or gets close to this 200 moving average, right around the it's 236.75. We'll round up for simplicity's sake, 237. I don't think it'll go below that, and it'll probably hang in right around 248, on some bullishness. So I don't love the group in terms of it's just not a top performer. Like I said, Bitcoin had base and done nothing for 8 months. We couldn't get above that 73K. Then what happened? Massive FOMO. Obviously, that is an asset that is 155 vol or so versus this. So it's going to take a little bit longer. I don't think the catch-up is going to be sharp candles like you saw in the semis. And in terms of the most bullishness for this group, I don't see it getting above 265. The most bullishness I can get in the next 3 weeks or so is 265, and that's not going to come near this all-time high at 283 set on July 11th. So this group, I would stay long. I would add when it gets to the 200 moving average. I don't think you're going to lose a ton, but I would not expect monster gains over the next couple of weeks or anything like that. I think this has a lid on it for quite a while. It's interesting. This very stark and sharp resistance it has at 265 has not been able to pull ahead of that since July. NVIDIA's earnings wasn't the catalyst. We'll see what it is. But I still love the chart. How can you not? Rising 200 moving average, not really putting in lower low. I mean, it is putting in lower lows here from 247 to 243. And that's when I think I had a lot of communications from folks when it started to get as ever close to 200 moving average. But it happens. And while it's still going up, I think we're just basing underneath this 260. It's going to be having a lid on, like I said, not the place to be out of all the spots in the market. But in terms of a look back at 52 weeks, you have to be in Bitcoin, banks or regional banks, and the semiconductors. I said it once, said it 100 times. I'll probably say 100 times more. All right, watch Bitcoin this weekend. Obviously, crazy stuff's probably going to happen with it. Either way. And yeah, next week's Thanksgiving. Let's see, programming now. I'll do a show on Monday. I'll do a show on Tuesday, and then I will not be around for Wednesday, Thursday, Friday. So we'll do Monday, Tuesday, and that shall be that. All right. Diffuse some kindness in your life with some people this weekend, and have some fun, y'all. Have a good weekend, Caleb. Thanks for watching, everybody, and we'll talk to you on Monday. Bye.